Hi guys, yeah, what's up? It's Arnold here. So today I just want um to to break down a quick reversal setup I caught on euro and Canadian dollar this last week and show you how I analyzed it fundamentally, sentimentally, and technically. So let's get into it. Now, the fundamental outlook of euro and Canadian dollar. The first thing that I looked at are the news, right? The information or the data released by the banks. Now, the Bank of Canada, not everybody, but those who like to read about this information and pay attention for the time they are released, the Bank of Canada recently kept the interest rates unchanged at 2.75%, signaling a pause, not too hawkish, but also not cutting soon. Meanwhile, the European Central Bank is still in a softer tone, right? With controlled inflation, which helps the euro to stay supported. Also, remember that the Canadian dollar is a commodity currency where oil and other commodity prices drop or stay uncertain. That weakens the CAD and given strength to euro and Canadian dollar on the upside. Now, the market sentiment for this currency, I looked at I looked at what was being, said, sentimentally, of course, and the note said that most traders were heavily bearish on euro CAD. When everybody's short, the market is ready for a short squeeze. And that's exactly what happened. A strong bullish candle came in with, some rejection from the downside. That was the first sign that, sellers were trapped and buyers were, stepping in. As you can see here, I have this trend line. Why this trend line? This trend line was something that I was that it was giving me update, because if you go to the daily time frame, of course we can see that euro and the Canadian dollar is long term going up. It's a bullish market. So I knew that if this trend line was to be broken, that was an enough signal for me to, look for buys. And of course, the trend line was broken. After I saw that, we have a break here, a break of structure, I had to wait until the market, retest this area. After I saw that, we have a retest here, and then there was a formation of a bullish candle. I took my trades. My stop loss, where my stop loss was? My stop loss was right here. Okay, right here. I took here, buy, risking 2% of my capital, and I placed my stop loss here. Yeah, after that, as you know, I'm a single trader. The only thing that I had to do was to wait and see what the market will do. And as you can see now, the market went up and up and up and up. After reaching this region here, I took most of my profit. Let me show you here. Let me show you. Okay. I took, yeah, as you can see here, I took most of my trades. I can show here in the history. This is a EUR Canadian dollar. Let me see. Here we have this, the first trade, the second trade. As I've said, I took almost 98% of my profits, and then I left a 0.01 locked the profit of this smallest trade in case the market goes up and up and up, because I have seen that I have done and then have seen that in most of the case. So if the market comes down, that's okay, but I will only get out of this trade when I see that the market is signaling a possible reversal, as you can see here. But this probably this is not a reversal. It might be, I don't know. Probably this is not a reversal. It will come. I guess there's a order block. I mean a fair value gap, and then it will go up again. I don't know, but I have done my money here. I've took my money. Now this is just for me to ride the upside of the market. We'll see where it ends, but the 99 or 98% of my trade, of course I took the profit. Yeah, this was the analysis.